And there it is. The markets are officially closed on this Wednesday, February 18th. Welcome, investors and traders. I hope you're having a great day. I hope you had a great long weekend, a rest away from the market. I mentioned this to a couple of our members yesterday. I know a lot of folks have a hard time pulling away, but it's a good thing to do that every now and then, to unplug from the market and spend some good quality time with your family. Now, we are going to look at the markets as we are hitting targets from last week's market report. And before we get into that, let me bring on Nod from our Nod Live news feed. Nod is busy putting out the relevant information to all of our members through his Nod Live feed. I don't know if there's a scan code there, but if anyone's interested in that news feed, understand that we're beating Bloomberg to the punch with regard to news releases. Nod is all over that news. Nod, what do you have for us this week? And then we'll get right into the charts.
Absolutely, AJ. Thanks so much. It's really great to be here. Happy Wednesday, everybody. Thank you so much for joining us. We do appreciate you taking time out of your busy schedule to be with us. Listen, despite concerns of a possible government shutdown, the Supreme Court marking the tariffs as unconstitutional, each major index closed slightly higher today as we look for bigger things coming this week. But listen, the number of Americans working two jobs is now at an all-time high, AJ. The delinquency rate on office CMBS sparked to 12.3%, which is an all-time high. But U.S. copper stocks surged amid processing bottlenecks and tariff fears. I know we'll get to some of those in our weekly market report. But listen here, I want to start with the Mag 7. So, AJ, I want to show you this. Because as the markets go and as Mag 7 goes, so do the major indices. This chart is really telling. According to Goldman Sachs, they say the positioning for hedge funds across the Mag 7 is at an all-time high, which also suggests that their powder is at an all-time low. So, AJ, if powder is drying out and that rising floor on all equities diminishes, can you please talk to us and do a deep dive on updated targets since they all hit for IWM, the triple Qs, and the SPY?
Well, you mentioned the Mag 7 stocks, and conveniently, I have a screen set up with the Mag 7 aggregate. So for the Thinkorswim users out there, you could put all the ticker symbols for the Mag 7 and separate those with a plus sign. I don't know if you could see that on the top left. You see Google plus Amazon plus Apple, Meta. You see all that on the top. And then what it does is it throws up the chart as though they're a fund of Mag 7 stocks. And you could see that recently, over the past 3 trading days, we've broken out below that 20-period moving average. But if I take a look, that's a weekly chart, by the way, but if I take a look at the monthly, you're going to see a very hard pivot to the downside right here. And that red candle that we have for February is one of the larger red candles that we've had since they've been talking about the Mag 7 stocks. In addition to that, if you look down below, the CCI on the monthly chart is crossing with a sell signal. And so I'm still more to the downside in my bias for the Mag 7. But if you look at DIA, I keep my lines on the charts here. Our members know this, but if you're joining us for the first time, maybe on X or one of the other social media platforms. In fact, you might want to go, if you're on X, you might want to join us on YouTube. All you have to do is scan that code. Where is that? Up in the top right here somewhere, I think. You scan that code and it'll get you right to our YouTube page, and then you could subscribe from there. And then also in the comments field, if you're watching us on YouTube, you could submit questions and comments there, and I make it a point to address all those comments and answer as many questions as I possibly can on all the videos that we put out through YouTube. And that, believe me, that's a lot of work. There's times where I'm spending my full day on Saturday answering questions for the folks that are watching us. But it's a great experience. And again, if you're following us, you'll know that these diagonal lines that I have here are all past targets that were hit. This here was a target after we hit the downside target here, downside target hit, downside hit. This one hit right out of the gate. Very next day after we set the target here, it hit the target the very next day. And then we had an upside target the week before last. And then last Thursday, I put that downside target, and it looks like we're about to go down again. And I'm leaning right now, the way the markets are today, I'm leaning more to the downside, mainly because of what we're seeing on the VIX. I'll get to that in a moment. But if you look at IWM, here's another one. Downside target is still in place. That's the only index that has not yet hit. And this candle right here is very close to a shooting star. You see the long shadow on top of that candle? Well, whenever you see long shadows like that, like even you see here, we tend to go lower when those long shadows are found at the end of an upward leg. So here we have an upward leg over the last 3 trading days, and that long shadow shows up. So I'm going to keep that downside target on IWM. If you look at the Qs, it did a great job of week after week here. Downside target took a couple of weeks here to hit on this candle, but right away this one hit. The upside target from the week before last hit on the very next trading day here on Monday. And then on the downside, this one hit right out of the gate. So here you got another long shadow on top of that candle. And now that the markets are closed, you could see that the volume is dropping as the price was up today in the tech sector. So that's a sign of weakness, because it's telling us that the buyers are running out of momentum. And if I go to SPY, which is the S&P 500 ETF, and then we'll come right back to you, not here in a minute. Downside target was hit, bounced off of this support level. If you had a chance to watch the recording from last Thursday, I drew that horizontal line talking about the possibility of going down to that level and bouncing off of support, which we absolutely did. And there you have another long shadow on top of today's candle with the volume dropping on the way up. And this all brings me to the VIX, because the VIX, also known as the fear index, I put a downside target that hit, and then what I did is I went out on a limb like I normally do, and I
yes, you do.
I drew this dotted line up here. That's up there over 28. I think that's where we're going to wind up with the VIX in the coming months. And so this is a little bit different, because now on the VIX, the shadow is at the bottom of that candle. So it's very close to it being what's known as a hammer candle. And hammer candles are bullish. So if I'm bullish on the VIX, what's that mean for the S&P? Well, for the most part, they're inversely related. So if I'm bullish on the VIX, we're probably going to go down on the S&P, at least in the short term. So, Nod, you got a whole bunch of other ticker symbols that we covered last week. I don't know if you want to go over those now or wait till later, but we had some targets there after looking at ticker symbols from our viewers.
Yeah, you did, AJ. I mean, listen. Let's hit those now. I mean, you hit 3. There were 3 from last week that did well, which is Bank of America, Google, and Fig. If you wanted, those all hit from 2 weeks ago. So do you want to grab those real quick?
Yeah, now you have to remember that we had a shortened trading week. Obviously, right. Monday we were closed for President's Day, so we didn't really have a whole lot of time to hit these targets. But right here was Wednesday. Right here, this big red candle. Thursday was another big red candle. And so on Wednesday, our viewers were asking about BAC. So I drew this downside target. And the very next day, on Friday, we hit that.
Right.
And then what happened? We had a little bit of a bounce. So that was a nice score. I don't know if anyone was trading those options, the put options on the way down for BAC. And then we had Google, which we still call Google here, GOG. That was another downside target. It's hard to see because the target line is hidden amongst these red candles right here. You see that? And so after the target hit, it's not uncommon to see this. After our targets hit, we generally get bounces. So yesterday we had a bounce. There's that long shadow pivot here today, but we're just not seeing a big volume day on the way up. So I think we could see a little bit higher on Google, but then I think we're going to start heading lower in more or less an ABCD pattern. And then what was the other one? FIG, Nod?
Yeah, Fig was at it, and then we can do one more because that hit from 1 week ago as well.
Yeah, here we go. This came out the very next day, hit the target, and what happened? It pivoted. Now I'll go. Do we have a name? Anyone in the audience who submitted this last week? Put your name in there again, and we'll give you credit for this one. I'll go with this on the upside. because the momentum is shifted. I think this one could go a little bit higher. It doesn't look like much, but that's going to be close to 4% higher if that target hits. I'll put that target at 25.23. We have anyone claiming that yet? Not yet, but we will. And so I think this one could actually wind up closing over that 20 period moving average. You see down below, I'll highlight this for you. For those who are brand new to technical analysis, you see these three lines. I have a red line, which if it goes over that, it's overbought. Then we have the 0 line, which is the black line. And we have the minus 100 line, which is oversold. However, most of the time, I would say the good majority of the time, when you have the CCI cross above the 0 line, our members know this like the back of their hands. We generally go to 2 to 4 days in the direction of the cross. So if we're getting a cross to the upside in CCI, we could go another 2 to 4 more days, which I think I'm being maybe too conservative on that target to see the stock up another 4%, because it was already up 4% today. But over a 2-day period for a stock like this to be up 8%, I mean, there's some stocks that you won't even get 8% dividend in the course of a year, let alone in the price action of the stock. So those are the ones that we look at. And then there was one other one.
Yeah, one from last week was SanDisk. That's kind of become the bell of the ball lately. SNDK, that was from last week, and that actually hit.
Yeah, look at this. See, we had downside target hit, upside from last week hit, and there you go again. So on this candle right here, this red candle hit the target, and what happens? We get a pivot lower after the target hits. Now, it's not because I'm putting a target on there that traders are reacting to my target. My targets are not going to move the market. However, the reason I dropped that target where it is or where it was is because right there is a key resistance area. So I was assuming we're going to get a little pivot, get up to resistance, possibly pivot, which we did, and now you got resistance holding. So if you're trading these markets, listen, it's not rocket science to learn how to trade. You just got to learn how to stay disciplined and follow the rules and follow the charts. And, we're here to help people do that. You could ask any of our members. We're having a great time in the market, and everything is driven by what we're seeing in the charts. You know that not better than anyone. You're dealing with every single one of our members on a daily basis.
Oh, sure. I love it. It's great. So AJ, you talked about volatility, which is clearly back. So we've now seen 5 1% moves over the last 3 weeks, suggesting a two-way volatility is back. There's a lot of overhang, and then there's a lot of cluster of 100 names that are hitting new all-time highs. But I want to go towards, if I look at this chart real quick, and I want you to focus, please, on Amazon and Microsoft. So while volatility is here with these 1% moves, Amazon and Microsoft have been big underperformers. I know we talked about Microsoft last week, but what are you seeing now with an updated target on both of these big key names?
All right, well, here's another one. We're kind of giving away a lot on this midweek report and what we do with our members. Every single Wednesday, we do a rapid fire session where for an hour, 60 minutes, I go over 50 stocks. And I don't think I told you this today, but out of the 50 stocks we analyzed last Wednesday, remember, we only had a 4-day trading session since then, not 5 like we normally have. And in that 4-day period, we've already hit 50% of those 50 targets, which is, I think that might be a record. That's definitely not normal. That's a way above average. Yep. But Amazon was one of those stocks. Here we put a downside target on Amazon last Wednesday, and look at that, hits the target right here, and then what happens? It bounces. But look what we're seeing here. We're seeing a pivot, but look at that little pitiful volume bar down there. That's only about what, maybe 60% of what we saw yesterday in Amazon. So Amazon is going to be under some pressure. Microsoft, I think, has a better chance at rallying. I mean, just what they're doing with AI, and you have to look that there was who was it? It was one of the big podcasters or vodcasters or video casters. They were talking about Microsoft coming out with a super chip, a superconductor that's a paradigm shift. It's going to change the way everyone looks at technology and AI. and Microsoft is all over that, because if you've been following what's going on in the race to AI, it's been said that the country who dominates in AI in that space is basically going to dominate the commerce around the world. And so there is a big race. The challenge for China right now is that they're under a lot of economic pressure. Xi Jinping is under pressure. He's being pursued by a lot of his generals. He's always, scattering his speaking engagements and going around. But Russia is not in a position to be spending a whole lot of money on AI right now, because they're too busy still fighting this war, which hopefully, prayerfully, we are praying for that peace to come about, but we don't know. But right now, the U.S. is in the driver's seat, and if they continue to dominate in the space of rare earth metals, like what Donald Trump is doing with this Project Vault, then we're again in that driver's seat. Now, Microsoft is in a very interesting pattern here. This looks more like a W forming. You see this? Now, a W pattern normally goes up towards the top of the W. That's why my target up here is still in place for Microsoft. I think we're going to see a rally there. Now, that could excite some of the investors who are holding this, $400 share stock, but I think it would excite the option traders even more, because you could trade a $400 stock for fractions of a dollar in trading out of the money options that are longer term. So if I take a step back and look at the weekly on Microsoft, look at that. You're very, very close to this key support level down here.
Quite the channel.
And yeah, exactly. And the weekly charts look a lot more bullish. I would have to say, normally I'm looking at the markets being, under pressure, but Microsoft looks pretty darn good on the daily and on the weekly chart. So we'll have to see. The other thing is, if you look to the left, as I draw to the right, you see what's happened right there? We filled this gap. Now, gaps fill 80% of the time, but a lot of times after the gaps fill, we tend to rally or bounce from the gap fill. So that's another reason to be looking at Microsoft more from the long side than the short side, because of that support level. So that's looking pretty good. Yeah. What else? What else you got?
Well, listen, AJ, we can't have AI or technology without gold or silver. So I want to pull this up, because as we talk to our StickyTrades.com community, volatility equals opportunity, and if you use discipline and risk management, you're going to have a great year. So AJ, your charting is a lot better than mine. But what you've been talking about the 27th of February, and in this chart, it talks about silver's descending bullish wedge breaking out. What are you seeing now with regards to gold and silver, a week removed from last week's volatility? And if you can talk briefly about some of the discounted miners like we have with some of our community with Hecla Mining and others.
Well, let me just do a quick shout out to the folks that are watching us on X. Okay, I'm going to read a headline that's off to the right margin under today's news. I'll read this right here. It's a short headline. Massive silver withdrawals from COMEX fuels squeeze talk ahead of March futures. Now, let me tell you what that means. I was a member of COMEX for 10 years. I served as the chairman of the option floor trading committee, and COMEX is running out of silver. On the 27th of this month, the holders of the futures contracts are going to have to notify COMEX of their intentions, whether they're going to roll the positions into March or whether or not they're going to take delivery. If more than 50% of the futures contracts that are held on the long side exercise and say, we want the silver, COMEX is in big trouble. They may have to call force majeure. You may have heard me talk about that before. They don't have the silver, so they may be forced to settle in cash. Now, that's going to disrupt the silver markets. And you hear the folks, the stackers, right? These are the people that buy silver and gold, and they don't ever sell it. They just hold it. Well, they're basically taking that gold and silver out of the market, out of supply, and it's only creating more of a demand. And because of the shortage, COMEX is the one that's going to be the main headline for the short squeeze. It's not going to be Goldman Sachs or JP Morgan. It's going to be COMEX, because they're the ones that are responsible for delivering the physical metal, and they've been playing games with manipulating it, so they caught with their pants down, so to speak, and they don't have the silver. So I'm looking at silver here. Look at that. That's a bullish harami, folks, right there. That's a bullish harami. It's a red candle. Let me draw this out for you so you can see. It starts off with a red candle. I'm just going to go body to body, okay? And then the very next day, we have a green body candle that falls within the body of the previous red candle. You see that? That is extremely bullish, 80% of the time. Here you had a bullish harami right there. And bullish harami, here's another one. Look at that bullish harami. Look what happened to silver. At that point, it went from 77 to 121 in just about a month after that bullish harami. So we've got bullish candles showing up. And no matter what what happens with silver and the paper contracts, whatever COMEX does, they're not going to be able to fix the crisis that we're seeing in the silver shortage. So I believe that there's huge opportunities in the mining stocks, especially. We had HL come out with earnings today, and some of our VIPs got in on this one. Right, this is Hecla Mining Company, and I've been telling our members that the mining companies are experiencing unusually high profit margins right now because of the explosive price action in the precious metals. So their profit margins go up, but their mining costs have not gone up all that much. In fact, inflation numbers are showing that prices are coming down. So their profits are going to continue to widen. And any analyst that comes out there and tries to lowball their earnings, guess what? These companies are going to blow out their earnings estimates, and you're going to have people responding. So HL is one of them that I like. PSLV, I absolutely love. This is as close you're going to get to owning physical silver on paper because it holds silver in the Canadian Mint. And that one was up over 6% or just about 6% today. I have a bunch of this. I have to disclose that. I have a bunch of this, and I continue to parlay this one. So it's a very exciting market. You just got to know what to do, how to do it, and when to do it. And that's the wins are coming from the charts. The how-tos come through us. We show people how to do it through our educational site. And I had a chance to review our basic option course that was coming out. Anthony in our office back there gave me a chance to review that. So we're coming out with information for those who never traded options, who are learning how to trade options at the basic level. And there's something for everyone here. So yeah, it's a great time. All right, so coming down to the last 7.5 minutes. What else you got, Not? Because we got to pay attention to that.
Yeah, real quick. So
down there. Yeah.
But before we grab some tickers from our members, listen, we've been very early about discipline. I'm talking about concentration risk. So AJ, I've got a chart here showing that the top 10 stocks make up almost 40% of the S&P 500 index due to their market cap, while the last 11 to 50 make up 22.5%. That's an all-time low and brings us back to the 1960s in the Nifty 50 area. So AJ, with this recent market volatility and high concentration, can you just do a quick recap of where we are with the amount of stocks above and below their 50-day moving average?
Yeah. Now, again, for the folks that join us for the first time, you may or may not know, what you're looking at on some of these charts. But let me just give you the main idea. Okay. This is an index here that you could pull up on your chart, especially the Thinkorswim platform. And it's $SPX, the letter A, and the number 50 and then R. So it's $SPX A50R. And what this is showing us is the percentage of stocks that are trading above the 50-day moving average. Now, on this chart, I have a dotted line that represents the 50% mark right there. So you could see that the majority of stocks are over the 50-day moving average. And the exact number is 65.67% of the stocks are above. But that also means just a little bit less than 35% are not above the 50 and right. They're down below. So you could see that there's a rolling effect going on here in this index that we're looking at. And so it means that there's more and more stocks now beginning to drop below the 50-period moving average. And that's a big deal because there are some algorithms out there and even some funds that have it written into the prospectus that they have to get out when certain stocks or indexes drop below certain key levels. And so once this starts dropping below 50, you're going to see a lot more selling coming into the market. So what that's telling us is to be more defensive with your trading. Don't buy and hold and hope, right? Buy and protect if you're going to go long, but also look to take some profits along the way so that you're not turning winners into losers, which a lot of people do, believe it or not. You don't want to turn winners into losers, not in this market.
All right, so AJ, let's take some tickers. Well, in our final few minutes, Bill, he's a grandfather. He said he's long Shopify shares for his granddaughters, SHOP. He sees a double bottom. What are your thoughts there, please?
Well, you got to be careful. This is not a double bottom. A double bottom is a long-term pattern where you would have to go out maybe even a couple of years to look at a bottom. It's a basing pattern. This would be more of a maybe a W. I would say that this is going higher in the near term. In fact, you say it's Bill,
yes.
Grandpa Bill. All right,
yes.
I'm going to go a little bit higher, but you got to watch this one. Maybe we'll look at this one next week. I'm going to put an upside target of 132.23, but you got to understand, Bill, we are traders. We're not long-term buy and hold. All right, so you got to be careful. We get in, we get out, we take profits, move to cash, and then we look for other trades. So for you, if you're looking at it as an investment, this you would go to the monthly chart, and this is what we're looking at. You got Shopify, fortunately for you and your grandkids, are in a beautiful upward sloping channel. Now, I would caution you to make sure you keep an eye on this if it gets back up to 180, because 180, that's not a double bottom, that's a double top. And so you're going to have heavy, heavy resistance up there. So there are some things that you could do to protect your profits. We can't do that right now, but maybe you come on over to StickyTrades for at least a couple of weeks, and I can help you better there with learning how to use options to protect or even collar your position, which is a pretty basic strategy that you can learn about to protect your profits in stocks such as this. Yeah, but that one looks more bullish than bearish for sure. Yeah.
Right,
what else?
So JA is looking for an update on Riot, please. RIOT, please.
JA. All right. Now this one looks good. This one looks good. It's closing over that 20-period moving average. However, you got to keep an eye on Bitcoin. Bitcoin's not looking good. Now, Riot is a stock that trades in the crypto space, right? Bitcoin, on an update today in the markets, even with the transports up pretty good, Bitcoin is down another 2% here. So you got to keep an eye on that, because that's going to be your leading indicator for the stocks like Riot, Ethereum, and some of the others. Mara is another one, Mara platforms. And so this one looks good for the short term, but I would do this. Let's just maybe a little bit higher tomorrow, but because of that long shadow, I would go right back down. So be careful of that one. I'll do a two-part forecast. I'll go to $16 on the upside, which is still only 51 cents, right? And then I think you're going to see it turn lower down to around 14.5. I'll put 14.5 there to get rid of some of those pennies. So that's a good one to trade. Our crypto guys in the Cryptex room, Matt and CJ, do their live broadcast. So you might want to, if you own Riot or Mara or Ethereum or any of those other stocks, you definitely want to plug in to their recordings that they do each and every week. They do them live on YouTube. So if you go to our YouTube channel, hit that notification bell, that will absolutely help you out. So now we got about 1 minute to go. Let's see what else we got here.
All right, so Jazz would love a fresh update on NVIDIA, please. It has had quite a volatile week since last week.
Oh, this one's stuck in a trading channel. Here's another one. NVIDIA is doing a great job hitting upside and downside targets. Absolutely. Here's another little target down there. So for Jazz, this one might come up in our conversation later today. But I would go down on this one. I think NVIDIA is going to hit that support level and retest that, and that's a long stretch. But I'm going to put 180 and I'm going to go 181 on that one. 181 to the downside, and then maybe you'll find some support down there. So that is it for our midweek report and some of these forecasting. Folks, I want to thank you all so much for joining us. You're helping us build this channel. Every time you hit that like button, you put comments. If you go to YouTube again and you hit the recording, you're able to leave your comments there, and I'll pick you up on that side of YouTube to help you out with any questions or comments. So that is a wrap for today. Thank you, Nod, for your news. Thank you, everyone. And we'll talk to you tomorrow on the weekly market report. Take care.